My name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. And here is your daily technical analysis of foreign exchange markets. I'm going to start with the euro. I said yesterday this is where it would start to get interesting. An immediate countering bearish engulfing pattern yesterday that offset the previous session's key reversal up. The fall not only dropped down through the middle time of the 2021 bearish Andrews pitchfork, currently 118.70, and the seemingly lightweight lesser Fibonacci congestion at 118.97 and 118.87, but more importantly it punched down through the important rising long moving average, currently at 118.68, as well as the significant June 2018 high at 118.51, closing right on the latter. Now this looks back to the idea that the last 3 or 4 weeks have been a possible bear flag in formation. Enough that I've placed provisional targets X1 at 17.05 and X2 at 16.15 as an initial and final target for such a move, should it happen. In the meantime, we still have not very far below now target X in the 18.05 area, 118.05 area. This is the target for the action over 2021 so far, being a sort of a halfway hesitation. So far today, an opening move lower, moving ever so nearer towards target X at 118.05. Below this we have the congestion from August to November last year, plus the 50% Fibonacci line at 117.58 from the big June 2020 to January 2021 move. Cable, aka sterling against the US dollar. A bearish black Mariposa yesterday, and an important one. The market punched down through and closed below the combination of the rising short-medium moving average, currently 138.09, and its partner, the start of November 2020 to date uptrend, currently at 138.10. The market halted at the top of the previously highlighted congestion, the 137.5 to 136.5 area, dating from the turn of January into February. However, the next significant support would be the rising medium moving average. That's currently at 132.61. Below that, we have the supremely important lower time, currently at 135.62, the late June, late September 2020 bullish shift pitchfork. This lower time, along with the middle time above, currently at 140.21, have given the bullish angle of attack of this market since September last year. So far today, another attempt lower, tentatively approaching the interesting 61.8% Fibonacci line of the whole of the 2016 move at 136.54. It all depends now if we have consecutive closes down here. Euro against sterling. Like yesterday, here it's all a little tense right now. A third bullish white soldier yesterday, and a first close up and outside the descending triangle, closing over the downtrend, currently at 85.97. This break upwards could be real, but it is not verified as yet. We currently still have the 3 targets below, target X2 for the second quarter of 2020's head and shoulders top, that's in the 85.15 area, and target X1 in the 84.75 area, the target for the recent sideways triangle. Finally, there's target X3 in the 84.5 area for the recent possible descending triangle pattern. The only issue with target X3, you see, descending triangles can break either way, though they tend to ever so slightly be bullish in breakout, hence the caution over the last 2 days' action. A break upwards of a descending triangle can only be measured from the actual confirmed break of the downtrend. Hence, if it happened yesterday, it would be in the 87.15 area, and that is why I've placed target X4 on the daily chart in that area today. So far today, the consolidation at the higher levels of yesterday, the market seemingly based on an old congestion, the 86.17 area. Overhead we have the April 2020 low at 86.69, then nothing until target X4. US dollar against the Indian rupee. Combination yesterday of a key reversal up, bullish engulfing pattern, and a bullish closing white Mariposa as well. The market rose back up over the September 2019 high at 72.41, and more importantly up over the upper trend line, the downtrend if you will, of the recent March based descending triangle pattern. Now I have recently mentioned for a few days now that it may be that the descending triangle pattern is morphing into another pattern with all this recent action happening, a possible falling wedge pattern. I hadn't marked it on the daily chart as such until today. Now I've already marked targets X and X1 in the 72.05 and 71.25 areas respectively as initial and final potential targets below for the descending triangle. It's about time I looked to the upside, just in case we've seen what we've seen last week and earlier this week has been a false break lower. Hence, a preliminary topside target X2 for a falling wedge would be in the 72.60 area. So far today, a fresh attempt higher outside of the downtrend and up through the 50% Fibonacci line of the July 2019 April 2020 move at 72.64, but halting, I suppose unsurprisingly, at the middle time, currently 72.71 of the October 2020 to February 2021 bearish Andrews pitchfork. That has run the recent bearish angle of attack. Now above that we have the declining short medium moving average currently at 72.87. US dollar against the Brazilian real. Still seemingly a little tense here as the forces from above and below match once more against each other. An indecisive spinning top yesterday, that's following on from the previous session's indecisive doji cross. That's pretty well describing the current situation. Now, the only issue is that yesterday could also be seen as a key reversal up as well. Above the market, we still have the recent bearishness and the interesting lesser 38.2% Fibonacci line at 552.90. Now, this lesser Fibonacci line provided the flat trend line necessary for the recent bullish ascending triangle. Meanwhile, the market closed between there and the broken, but still influential, mid-January to date uptrend. That's below currently at 551.05. This uptrend was the lower trend line for the very same bullish ascending triangle. Further down we have the combination of the rising short medium moving average currently at 546.84. That was the base of yesterday's action, interestingly, and the recent 50% Fibonacci line at 544.41. Finally, a point I made late last week. The action from 2 weeks ago until now looks suspiciously like a bear flag pattern. It is looking less so now, more ragged. However, just keep an eye on that, just in case, especially as we have some seemingly heavy duty support below from the long moving average currently at 540.68 and the medium moving average currently at 537.01 and the 50% Fibonacci line of the May to June 2020 move at 539.29. US dollar against the Mexican peso. A countering key reversal up yesterday in response to the previous session's unusual bearish black Maribosa. The market was once again held up by the previously highlighted support of the combined lesser Fibonacci level at 20.60.62 and more importantly the very recent 50% Fibonacci line at 20.58.49. The cap on the day was the same short moving average currently at 20.78.73. While sneaking in from above, we now have the descending long moving average currently at 21.05.28, and that's entering the frame. So far today, an immediate attempt lower, but not as far as the combined Fibonacci levels below as yet. Not the sort of thing you'd like to see if you were a bull out there, shall we say. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.